Your March Social Security check is already on the way. And for millions of retirees across America, it's crossing the $2,000 mark for the first time. That's not a rumor. That's real money, confirmed by the Social Security Administration itself. Thanks to the 2.8% cost of living adjustment that kicked in January 2026, the average monthly retirement benefit has climbed to over $2,071, and your March payment dates are already locked in. If you were born between the 1st and 10th, your money hits on March 11th. Born between the 11th and 20th, that's March 18th. And if you've been collecting since before May 1997, you're getting paid as early as March 3rd. But here's what most people aren't talking about. This COLA bump also raised the earnings limit to $24,180 a year, meaning you can now work and collect without losing a single dollar more than before. Stay right here because we're breaking down exactly what changed, who qualifies, and what you need to check on your My Social Security account before your March payment lands. So let's start from the very beginning, because a lot of people are confused about where this $2,000 number is actually coming from and whether it applies to them personally. And I want to be crystal clear with you right from the start. This is not a one-time bonus check. This is not a special government stimulus. What you are seeing is the result of a permanent, locked-in benefit increase that the Social Security Administration officially applied to monthly payments starting January 2026. And the reason millions of retirees are now receiving checks at or above the $2,000 threshold is because of the 2.8% cost of living adjustment, which is also called the COLA, that went into full effect at the beginning of this year. That adjustment didn't just add a few pennies to your check. For the average retired worker in America, it added roughly $49 to $58 per month, on top of what they were already receiving in 2025. And when you stack that increase on top of the benefit amounts that were already climbing over recent years, you now have a situation where the average monthly retirement benefit for a single retired worker has risen to over $2,071 per month. That is a historic threshold, and it matters enormously for people who depend on this money to cover their groceries, their utility bills, their prescriptions, and everything else that has gotten more expensive over the last several years. Now, you might be sitting at home right now wondering, okay, but why is my check different from my neighbor's check? And that is one of the most common questions seniors ask, and the answer is actually really important to understand. Social Security benefits are not a flat payment that every retiree gets equally. The amount you receive every single month is based on your personal earnings history, specifically the 35 highest earning years of your working life. The Social Security Administration takes those 35 years, adjusts them for inflation, averages them out, and then applies a formula to calculate your primary insurance amount, which is basically your base benefit. So if you worked in a higher paying profession for decades and consistently paid into the system, your monthly benefit could be well above that $2,071 average. And on the other side, if you had lower wages, worked part-time, or had gaps in your work history, your benefit might be below that average. The COLA percentage is the same for everyone, 2.8%, but because it's a percentage of your existing benefit, the actual dollar amount added to your check will be different from person to person. This is why it's so critical to log into your My Social Security account at ssa.gov and look at your own benefit statement, because your number is unique to you. Now let's talk about the payment schedule for March 2026, because this is something that confuses a lot of retirees, and I want to walk you through it slowly and clearly. The Social Security Administration does not send everyone their payment on the same day of the month. They split the payment schedule up based on your birthday, specifically the day of the month you were born on. And this system has been in place for years, but it still catches people off guard. So here is exactly how it works. If your birthday falls between the 1st and the 10th of any month, your Social Security payment arrives on the second Wednesday of the month. For March 2026, that payment date is March 11th. If your birthday falls between the 11th and the 20th of any month, your payment arrives on the third Wednesday of the month, which for March 2026 is March 18th. And if your birthday falls between the 21st and the 31st of any month, your payment lands on the fourth Wednesday of the month. And for March 2026, that date is March 26th. Now, there is one very important exception to all of this. If you started collecting Social Security benefits before May 1997, or if you are receiving both Social Security retirement benefits and Supplemental Security Income, which is commonly called SSI, then you are on a completely different schedule. You receive your payment on the 3rd of every month, regardless of when your birthday is. So for March 2026, that group of beneficiaries received their payment on March 3rd. Knowing your exact payment date matters because it helps you plan your bills, your rent, your medications, and everything else around when that money is actually going to land in your account or your mailbox. And speaking of your mailbox versus your bank account, if you are still receiving a paper check in the mail, I want to strongly encourage you to consider switching to direct deposit as soon as possible if you haven't already. Direct deposit is not only faster, it's safer. Paper checks can get lost in the mail, stolen from your mailbox, or delayed by weather and postal service issues. When you have direct deposit set up, that money goes straight into your bank account on your payment date without you having to do anything. You can set up or change your direct deposit information directly through your My Social Security account at ssa.gov, and it typically takes 1 to 2 payment cycles to fully switch over. It is one of the simplest things you can do to protect your financial security and make sure your money gets to you without any complications. Now let's talk about something that a lot of retirees don't fully understand but absolutely need to, and that is the earnings limit change that also took effect in 2026. If you are below your full retirement age and you are still working while collecting Social Security, there is a limit on how much you can earn before the Social Security Administration temporarily reduces your benefit. That limit increased this year. In 2026, if you are under full retirement age for the entire year, you can now earn up to $24,480 without any reduction to your Social Security check. That is up from the previous year's limit, and it gives working retirees significantly more breathing room. For every $2 you earn above that limit, $1 is temporarily withheld from your benefit. But here's the part people often miss. Once you reach your full retirement age, those withheld dollars don't just disappear. The SSA recalculates your benefit and pays them back to you over time in the form of a slightly higher monthly payment. So if you have been afraid to take on part-time work because you thought it would hurt your Social Security, the updated 2026 rules may give you the freedom to do so in a much more financially comfortable way. Let's also talk about Medicare, because for the majority of retirees, Medicare Part B premiums are deducted directly from your Social Security check before it ever hits your bank account. And in 2026, Medicare Part B premiums did increase. The standard premium for Medicare Part B in 2026 is $185 per month, which is up from $174.70 in 2025. That is an increase of about $10.30 per month. Now, I know what you might be thinking. If my Social Security went up by the COLA increase, but Medicare is also taking a bigger bite out of my check, am I actually coming out ahead? The answer for most retirees is yes, but by a smaller margin than the gross COLA number suggests. This is exactly why you need to look at your net benefit amount, meaning the amount after Medicare Part B is deducted, rather than just the headline COLA percentage. The SSA mailed out new benefit statements in December 2025 and January 2026 showing your updated net monthly payment amount. If you no longer receive paper mail from SSA, you can find your updated benefit amount by logging into your My Social Security account online. You deserve to know your exact number, not just the national average. Now, there is another important piece of this story that does not get nearly enough attention in mainstream media, and that is what happened with Social Security taxation rules heading into 2026. A large number of retirees are surprised every year when they discover that a portion of their Social Security benefits may actually be taxable at the federal level. And this year, with benefits rising, more retirees could find themselves crossing the income thresholds that trigger this taxation. Here is how it works. If you are a single filer and your combined income, which is your adjusted gross income plus non-taxable interest plus half of your Social Security benefits, exceeds $25,000, then up to 50% of your Social Security benefit could be taxable. If your combined income exceeds $34,000, up to 85% of your benefit could be subject to federal income tax. For married couples filing jointly, Those thresholds are $32,000 for the 50% level and $44,000 for the 85% level. These thresholds have not been updated in decades, which means more and more retirees are being pulled into taxable territory every single year simply because their benefits have grown with inflation. This is not meant to scare you. It is meant to prepare you. If you are not already working with a tax professional or at least using a tax preparation service, now is the time to start, because catching this early in the year gives you options to manage it before your taxes are due. Something else worth discussing right now is the Social Security Fairness Act, which was signed into law in January 2025. This is a massive change that affects a specific group of retirees. Those who spent part of their careers working in public sector jobs that did not pay into Social Security, such as certain teachers, firefighters, police officers, and other government employees. For years, two provisions called the Windfall Elimination Provision and the Government Pension Offset significantly reduced or outright eliminated Social Security benefits for these workers. The Social Security Fairness Act repealed both of those provisions entirely. What that means is that millions of public sector retirees who were previously receiving a reduced Social Security benefit, or in some cases no benefit at all, are now entitled to receive their full benefit amount. And the SSA has been processing these corrections and issuing back payments to affected individuals. If you or your spouse worked in a public sector job and you believe you may have been affected by the WEP or the GPO, you need to contact the Social Security Administration directly or log into your account to check your status. Some of these back payments are quite significant, representing months or even years of benefits that were previously reduced. This is real money that people are entitled to, and many of them don't even know they have it coming to them. Let's also address something that comes up constantly in the comments and questions from viewers, and that is the question of whether Social Security is safe long-term. I understand why people worry about this. You hear things in the news about the Social Security Trust Fund, about projected depletion dates, about politicians debating the future of the program, and it can be genuinely unsettling, especially if you are already retired and depending on this income every single month. Here is the most honest and straightforward answer I can give you. According to the most recent trustees report, the combined Social Security trust funds are projected to be able to pay full scheduled benefits until approximately 2035. After that point, if no legislative changes are made, the program would still be able to pay around 80 to 83 cents of every dollar of scheduled benefits using ongoing payroll tax revenue alone. That is not zero. That is not the program disappearing. But it is also not a situation where everyone should be completely at ease and assume nothing will change. What it really means is that Congress will need to act before that window closes, and historically, Congress has always acted to preserve Social Security, even if the solutions have sometimes been painful, such as raising the retirement age or adjusting the taxable earnings cap. The program has been in existence since 1935 and has never missed a payment. That track record matters. Before we wrap up this part of the conversation, I want to make sure you know about a few steps you can take right now, today, to make sure you are getting everything you are entitled to from Social Security. The first thing is to log into your My Social Security account at ssa.gov and verify that your personal information, your banking details, and your benefit amount are all correct and up to date. The second thing is to review your Medicare deductions so you understand your actual net monthly income. The third thing is to look into whether you qualify for any extra help programs, also called the low-income subsidy, which can reduce or eliminate the cost of Medicare prescription drug coverage for people who meet certain income and resource limits. Millions of seniors qualify for this assistance and never apply for it simply because they did not know it existed. The fourth thing is to check whether you might qualify for supplemental security income in addition to your regular retirement benefit, especially if your total monthly income is on the lower end. And the fifth thing, and this is especially important for anyone who worked in a government job, is to check whether the repeal of the WEP and GPO under the Social Security Fairness Act affects your benefit amount. The bottom line is this: your Social Security benefit is one of the most valuable financial assets you have in retirement. It is inflation protected, it is guaranteed by the federal government, and it is something you paid into your entire working life. Understanding exactly how it works, exactly what you are receiving, and exactly what changes are being made in real time is not just interesting information. It is essential to your financial security and your peace of mind. The $2,000 threshold that millions of retirees are now crossing is a meaningful milestone, but what matters most is making sure that your individual payment is accurate, that you are not leaving any money on the table, and that you are prepared for the tax and Medicare implications that come along with receiving these benefits. You worked hard for this, you earned it, and you deserve to have all the facts so you can make the best decisions possible for yourself and your family going forward.